All right, let's dive right in. Today, we're going to take a look under the hood of India's economy to really understand its financial engine. We'll explore how its monetary and financial systems are navigating a pretty complex world, not just with resilience, but with some real growing strength. So, here's the big question, right? In a world that feels pretty turbulent, with all these geopolitical shifts and rapid tech changes, what's the secret sauce? What's making India's financial sector so robust? It's a really fascinating story of recovery, innovation, and some smart strategic foresight. And the answer, it turns out, isn't some single silver bullet. It's about a continuous, adaptive process, what our source material calls a refined regulatory touch. It's this really delicate balancing act between pushing for growth and making sure there's unshakable stability. That's the core of what we're talking about today. Okay, so our story begins with the absolute bedrock of any financial system, the banks. To build a stronger future, you've first got to confront and clean up some serious issues from the recent past. And it really wasn't that long ago that the headlines were all about this twin balance sheet crisis. This was a time when banks were just struggling under a mountain of bad loans, and corporations were way too overleveraged. The whole thing put a major drag on the entire economy. Now, what's really incredible here is the sheer scale of the turnaround. Just look at this. The gross non-performing asset ratio has absolutely plummeted from a high of over 11% in 2018 to a projected low of just 2.2%. This isn't just a small improvement. It's a truly historic cleanup of bank balance sheets. And this number shows the result of that cleanup. It's not just that the bad loans are gone, the banks themselves are fundamentally stronger. Think of this capital to risk weighted asset ratio as a bank's safety cushion. And at 17.2%, it means they have a very, very healthy shock absorber, way above the minimum requirement. This gives the whole banking sector a lot more resilience for any bumps down the road. So let's move on to the next piece of the puzzle. A stable banking system is crucial, of course, but its true power is unlocked when it actually reaches everyone. We're now going to look at the massive expansion of financial access happening all across India. And at the very heart of this inclusion story is something called digital public infrastructure, or DPI. Just think about the night and day difference this makes. Before, life for so many people was based on cash and informal credit, leaving no data trail. Now, with tools like UPI, every single transaction helps build a verifiable financial footprint, and that opens the door to formal credit. It's a total game changer. And this digital foundation is being supercharged by targeted government schemes. The scale here is just staggering. Take the Mudra Yojana, for example. It's designed to give loans to small and micro enterprises. We're talking about over 55 crore, that's 550 million loan accounts sanctioned. It's this massive push to specifically fund the unfunded. And the crucial point here is that this isn't just about handing out loans. It's about creating real, measurable economic impact. Look at the PMS Vanidhi scheme. This gives working capital to street vendors, a group that was often totally excluded. Well, the people who used it saw their annual business income grow by an average of 20%. That's tangible progress, empowering people right at the grassroots. Okay, so you've got a more stable and a more inclusive financial system. With that in place, another really profound shift is taking place. This one is all about how ordinary Indians are now putting their money to work, fueling the next wave of growth. This chart tells such a powerful story. If you go back to about 2012, almost 60% of household savings just went into traditional bank deposits. But look at the shift by today. That share has dropped all the way to 35%. And where is a big chunk of that money going? Well, the slice for shares and mutual funds has jumped from a tiny 2% to a really significant 15%. And the result of this shift is an absolutely enormous creation of wealth. Get this, an estimated 53 lakh crore rupees in new household equity wealth has been generated in just the last 5.5 years. These aren't just numbers on a screen. It means people are directly participating in and benefiting from the country's growth story. It's turning savers into investors. So we've seen stability, we've seen inclusion, and we've seen this savings revolution. But what ties it all together? This brings us right back to our core theme, that intelligent, adaptive regulatory strategy that's underpinning all these successes. To really understand the change, you have to appreciate the starting point. For decades, the regulatory landscape was, frankly, a jungle. Imagine trying to navigate nearly 9,500 different circulars, many of them old, complex, and even overlapping. This just created a huge compliance burden and slowed everything down. So, what did the regulators do? They undertook a massive cleanup. They reviewed everything, repealed all 9,446 of those old circulars, and replaced them with just 238 clear, function-specific master directions. This move from complexity to clarity is a massive deal for improving the ease of doing business. And the results of this refined approach are being noticed globally. Here's a quote from S&P Global Ratings, which recently upgraded India's insolvency regime. They're specifically pointing to key reforms like the Insolvency and Bankruptcy Code, or IBC. This was a landmark law that created a much more streamlined, time-bound process for dealing with failing companies, and it's led to much better recovery rates for lenders. But, and this is so important, refining the touch also means being honest about what still needs work. And this number highlights the ongoing challenge perfectly. While the IBC framework is a huge improvement, the actual average time to resolve the case is still 713 days, more than double the legal limit. It just shows that creating a strong law is one thing. Perfecting how it works on the ground is a continuous process of reform. Okay, let's bring this all together and look at what this means for the road ahead. What are the big takeaways from this whole transformation? It really boils down to 4 crucial points. First, stability is back. The banking system is stronger than it's been in a very long time. Second, inclusion is radical and tech-driven, creating new opportunities for millions. Third, household savings are evolving, creating a powerful domestic engine for the capital markets. And finally, the key to it all is that adaptive regulation, the understanding that this is a process of constant refinement, not a one-time fix. And that leaves us with the big question for the future. The foundation has been laid, the engine has been tuned. But can this dynamic balance between fostering innovation and ensuring stability scale up to meet the immense aspirations of nearly 1.5 billion people? Well, that is the challenge and the opportunity that lies ahead.